So today, I want to talk about investing, and specifically, I want to talk about. There's actually some good ASMR sound. I don't know, that's just like me rubbing my leg, nervous twitching. It's pretty good. Anyway, I want to just talk about strategies for investing. A couple different strategies. So we're talking like high level thinking, high level, just pull back real top down, not giving like any specific advice really, but just some ways of thinking about how you might invest your money. Sorry for the burp. Had some Taco Bell. Had some Stevia. I don't know if this makes you gassy. I don't think so. I like it though. It's Stevia. Hey, if you want, I'll drink them in every episode you send them to me. This is not sponsored. I just like the product. Anyway, so basically the way I see it, there's a couple different forms of investing strategies, and I think I want to say there's 5. Okay, so there is investing in yourself, which is obvious. There is what's called value investing. There is income investing. There is like active investing. And what's the 5th one? I don't know. I think I was gonna do a bit about like what did I want to call it? I don't remember what I wanted to call it, but I was gonna like think like going to the doctor, like wellness investing, I guess. So let's start with wellness, the first and the last one. Wellness investing it's just a pound. What is it? Oh god, I can't remember the phrase. It's like a pinch of prevention is a pound of cure or something like that. But basically, like when I'm thinking wellness investing, it's like, what are some things you can invest in that will pay off healthcare cost wise, and at the same time you could think like, what are things that I could buy that will save me money, so I mean, I guess if you think of it that way, it makes a lot more sense. So, going to the dentist for regular checkups, which I do not do because I'm terrified of the dentist, but I do need to go. So leave comments about how big of a wuss I am that I'm afraid of the dentist, and maybe I'll be like, no, I'm not. I'll show you, and then I'll actually go. So that's like a really good example. Like, if you buy like a bike, like an exercise bike or like a road bike, that's an investment in a sense, because like you're getting healthier. Like, you might be saving money on gas if you ride your bike places instead of drive places. You might also get experiences out of it. I know here in Omaha there's something called the taco ride, where like hundreds of people ride this one trail to this like weird taco shack. It's like a 20-mile ride. It's great fun. You meet people. Who knows? Maybe you meet your husband, wife, significant other. Business connections. All kinds of good things can come out of that. That, when you think about it, that really is a type of investing in experiences, investing in having a good life. Getting a pet is an investment. It's like, Bear is not gonna let me now walk him a lot because he's just a rambunctious guy, and he makes my day better. When I walk in the door, I've had a crappy day, and he's right there, and he's just like, oh my god, Dad, I'm so excited you're here. I don't know why Bear talks like that, but he does. That's all an investment. So along with that, you also have the opposite end of that coin, and that would be investing in things that make you money. And yeah, I know, like that could be stocks, obviously, but like, if you think of that, like, if you became a photographer, buying a camera, buying a lens, buying a light, this camera, my other big cinema camera, this light, all my other lights, I probably have spent $40,000 or $50,000 worth of camera equipment, and I've definitely made in the last 10 years. It's gotta be like 10x that. So it's like it's pretty good return on investment. You know what I'm saying? So that's something to think about. You could also think like education. Paying for classes, getting on like Skillshare. This is not sponsored by Skillshare. I don't have enough subscribers to get a Skillshare segment. Also, I don't know how an advertisement in the middle of an ASMR video would even work. That'd be so weird. Anyway, but Skillshare, I've used Skillshare. I feel like a lot of Skillshares could just be YouTube videos. Like, they're just like really long, and I'm like, this could be a 10-minute YouTube video. I digress. Maybe it's because I watch the filmmaking ones, and I'm like, half these people are YouTubers. Like, kind of a ripoff. Whatever. They're living their best life. Lynda.com, which is free at a lot of places. If you have a public library in your city, they might have a subscription to Lynda.com. Go in and get a library card, figure it out. Because, like, I've done a bunch of Lynda classes, learned a lot. Of course, YouTube University, those are things that cost you nothing but time. But, like, going to actual school, getting a degree, that's an investment. Becoming, like, CPR certified, that's an investment. All that stuff, those are all investments, too. You could make more money. That builds wealth, and they're probably a lot safer investments than a lot of things. I mean, I'm not going to say go buy a camera and start a YouTube channel, because that's only going to work as well as you do, and as well as, you manifest it into your life. It's not guaranteed money. Not everybody can just sit here and whisper like a dumbass all day. Oh man, this is the second video I've done today. My mouth is, I'm like, man, how did I do those like hour-long videos and not just shred my voice? Maybe I just wasn't aware of it. Anyway, so like, yeah, those are two ways you can invest in yourself. You can either invest to save money or invest to find a way to make more money. Invest in a wardrobe. Something else you can do. So that said, there are three kind of fundamental ways you can invest in the stock market. And so I'm going to go from, what I think, well, I don't know, here they are in random order. None of these are better. They're just different. And it's really about what you think is best, what works for your brain the best. So the first type is growth, or I've often seen it called the value investing. That's where you invest your money in companies that you think are a good value. You think like, I'm going to buy Amazon because I think it's really cheap right now, because I think they can make a lot more money in the next 10 years. So you're thinking long term. Excuse me, a little burp there. So like, you might invest, you might think like, okay, well, fully electric vehicles are the way of the future. Like, so I'm going to put some money in Tesla. I think Ford is doing a lot of things with that, so I'm going to put some money in Ford, And then you think like, okay, well, who makes batteries? So I'm going to put it in a battery company. And who makes like computer chips? So like Intel or AMD or Nvidia, those are all potential options. You think of it like that. Or you think of it like, I'm trying to think of like another example that's like recent, like on people's minds. Maybe you think like, oh, I think Snapchat's gonna make a comeback, so you invest in Snapchat. Or you think Facebook is gonna pivot and they're gonna do more Amazon type things, or have their own like streaming thing to compete with Netflix, so you put money in Facebook. Or you think like Twitter is doing whatever Twitter does, and so you're gonna put money. P.S. I have a Twitter. Please follow me, even though I don't post anything on there. So like that's a way of thinking of like growth investing, but also like think of it on a much bigger scale. Don't just think of like those are just like easy examples that a lot of people could relate to. But like if you know there's like a local energy company and they're building a new plant or something, you're like, well, they're probably going to make more money, and their stock is only a couple bucks. you think will continuously make money, etc., etc. The next type of investing, I would call that dividend investing or income investing. This is where you are generally buying like very mature stocks. So you would think like some popular ones would be like AT&T, Union Pacific Railroad, Coca-Cola. That's the three big ones. But they are companies that pay what's called a dividend. A dividend is when a company makes money, they make profits. They take some of those profits and they pay them out to the shareholders, the people that own the company essentially. And they pay that in a dividend, which is, a certain percent of the stock called the dividend yield per year. And, some companies, I believe, don't quote me on this, they like pick a dividend yield. And then that's just whatever the stock's trading at, they pay that. I think some other companies just pay like a flat, like it's going to be this per share. But I think the dividend, like the established dividend yield is more common. So it's a little easier to predict what your payout's going to be. And if the company grows with inflation, the payout should be similar in buying power. So that would be another type of investing. I feel like that's a really safe way to invest because if you think about it like I do with that, is that you are buying a money printer. You're buying a thing that just prints money every quarter or every month. Some pay quarterly, some pay monthly. Most pay quarterly, but there's a couple that pay monthly. And just know like every quarter, Coca-Cola is going to give me, I don't remember. I think it's like 25 or 30 cents per share you own, something like that. I think it might be more than that. So you're like, okay, if I have 100 shares, that's $25 or $30, and if you had 1,000 shares, now you're making $250 or $300. So you think of it like that, and it's like as long as the company never goes under, you just keep buying these stocks, you keep reinvesting those dividends into more stocks that pay dividends, and it kind of snowballs to a point where at a certain point you don't need to work anymore because your dividends are just giving you so much money that you could just live off of it. And it's good because they should grow, with inflation. So even when you retire, you won't really ever have to pull money out of the market. You just kind of take your dividends, which are paid out as cash, into your brokerage account. So that's good, especially if you're thinking long term. If you're very young, dividends are good. They're super safe. You can get in like a company like Coca-Cola has been around for like 100 some years, and they've been paying dividends forever. So like that's an option. There's also ETFs that pay money into. Oh, that might have been the fourth kind of investing I was going to talk about, where it's kind of like set and forget it. But I digress. So like Coca-Cola, but then there's like what's called an ETF, which is an electronically traded fund. So essentially, it's a company that trades like a stock, but what they do is they take money and they buy assets like stocks and real estate and bonds and all that stuff, and they just try to grow. They essentially they're investing. It's like a mutual fund, if you're familiar with that, which is a similar idea. They take money and they invest it for you essentially. So ETFs are good, and some of them pay dividends, so that's also really good. Mouth sounds. So then the last type of investing, I guess I would just call it like active investing. And that would be kind of speculative. Speculative, I think, is a better word. So basically, that would be like doing a lot of options trading. That's like day trading. That's like you have enough money. You have $500,000. You buy 10,000 shares of Coca-Cola because you think it's going to go up 10 cents today. You buy the shares in the morning, you sell them in the evening, and then you just made 10 cents times 10,000, which I can't math. If you had 10,000 shares and you made 10 cents per share, you just lost $2,000. So there's that. But that's a way. There's options trading, which is similar in that you're buying, the opportunity to buy and sell stocks. That's like a really complex thing that is hard to explain quickly. But essentially, you're buying opportunities to buy bulk shares. It's a long story. I'll explain it in a different. I think I did explain it in a different video. Go look at the other videos. So that would be, the other way to invest money. And then the last way, the bonus way, number 6 way of investing is passive income. And there's not a lot of ways you can truly, really make passive income. If you think like dividend investing, that's kind of what you're doing. So with a truly passive system, what you would do is you would find, let's say 5 ETFs. These are, they are individual companies buying a lot of other companies, so you're super diversified. You would do an auto payment. So if you would do like $200 a month to start with. I mean, obviously, if you make a good amount of money, you could do more. Please do more. Try to think what a good benchmark would be. I would say, anywhere from 10 to 20% of your income would be a good number to hit. Some people go as high as 50 if they want to retire early. That could be up to you depending on your lifestyle, how much money you make, etc. But then you would just auto pay it into your brokerage, and then you can have your brokerage evenly divvy that up into certain stocks. That you can do that all without paying like management fees, I believe. Don't quote me on that. But you could do it into those 5 ETFs, and you could set it so any dividend it pays just reinvests in the same security. And bingo, bango, bongo, like every month it's pulling the money, distributing it to those new stocks, and taking any dividends you make and just cycling itself. So you do that, you forget it exists, and then you check it, once a year, just to make sure the ETFs are still going good for you. And that's it. And then, 10, 15, 20 years down the road, theoretically, you should have a pretty well-funded portfolio that you can draw from to retire from. So there you have it. Those are the ways, the strategies you can invest in. It's very much, it's not a one or the other. Like, you can invest in growth stocks that pay dividends. You could be like a speculative investor in growth stocks, speculative investor in dividend stocks. You can have 3 portfolios where, for me, my IRA, which is my actual retirement fund, which has some tax benefits to it, is a dividend portfolio. And then the rest of my money is spent in long-term growth stocks and speculating on stocks like GameStop or a couple other ones I did. Palantir is a really popular one. That's another one. A lot of people like AMC. I don't have that one. But then on the long-term side, I've got BlackBerry, which I like for reasons. And then I've also got AMD. So those are 2 that I have. But I'm not telling you what to get. Go look for yourself. So I'm doing all 3 of those. And then also, I buy kettlebells, I buy camera equipment. So I've got, I'm trying to be very diversified. I'm trying to save money. I'm trying to make money. I'm trying to, have a dividend portfolio that's just constantly trickling down some pennies and dimes for now. I think I make, like $100 a year on dividends, which is nothing. But who knows? If I keep putting money into it, I've been neglecting it a little bit, but I need to get up on it, especially as my speculations have been paying off very well. So I'm gonna take some of that out and put it into the safer ones. There you have it. Those are 6 strategies, 5 plus 1 strategies for how you can invest your money, how you can start thinking about how you can build your wealth, build towards retirement. So that's what I got for you today. If you have any questions, if I missed out covering something, please drop a comment down below. Ask me a question. Send me a message. I don't know how I get messages on YouTube, but I'm sure there's a way to do it. If that's, want to ask in public, cool, no worries. worries. But comments help me out, so leave a comment anyway. ASMR bully. I'm gonna bully you into buying retirement funds, nerd. So anyway, that said, I hope you're doing well. Thank you for watching, and if you're not doing well, fuck, I fucked up my own ending. Thank you for watching. I hope you're doing well, and if not, I hope that turns around for you real soon. And in the meantime, stay hydrated, get some sleep. I'll see you next time, which I'm guessing will be at the new apartment. So, have a good one. See you next time.